Good evening, everyone. We're about to start our webinar pretty soon. Meanwhile, while we're still waiting for the rest to join in, should you have any questions, we have a panel of consultants from Huttons London Division from the management team that will help to answer your questions. So feel free to key them in the column, Q&A column, and then my colleagues here will be here to answer some of the questions that you may have regarding Singapore landed properties. Okay, hi, good evening, everybody. We are starting our webinar now. Okay, thank you for joining us. And my name is Cindric Go from Huttons Landed Division. Today, we're going to talk about, is the tipping point coming for the landed market in Singapore? So before we start, I'm going to introduce to you our main speaker for today. All right. Okay. Okay. Today our main speaker will be our Huttons District Director, Willie Cheng. Okay. Willie Cheng is the founder, of course, of Huttons Landed Division. Is one of the most prolific landed teams in Singapore. Okay. We've transacted a total to date of more than 280 landed properties. Okay. Willie Cheng himself is also a multi-award winning producer and leader, including 10 consecutive top 100 annual producers. He was also a millionaire producer for the year 2021. He's also featured in Money Mine and Edge Prop, and these are some of the articles that featured him, and also part of Huttons Landed Division. So without further ado, I'm going to hand the time right now over to Willie. All right. Willie Cheng.
Thank you, Cindric. Good evening, everyone. Thanks for joining us on a Friday evening. This is the first time that we're conducting a webinar on a Friday due to popular demand. We used to do this on a Thursday, the day before. It's glad to see how many we have, about 50 participants now, which is good. All right, so thank you, Cindric, for the very generous introduction. But Cindric, as you can see, is also one, I think, of the many teammates of mine, okay, who are the respective district ICs, okay, of Huttons Landed Division. So I have from Michael, Will, Jason, Sean, and Justin as well. So together, actually, we cover about 11 districts in Singapore, which makes up about more than 80% of all the transactions. So I think our analysis today, or for the past many years, which I'm going to share with you soon, is should cover, actually give a very holistic and comprehensive understanding of the lender market. Okay. So if you're new to Huttons Landed Division, if you have followed us before, this should not be new to you. If not, this is basically, I think, our entire team. And if you want to follow us or to find out more about what we do, what are the houses that we're marketing, etc., these are the 4, I think, QR codes on social media portal that you can screenshot this, can scan this later as well, right? From Facebook to YouTube and Instagram. I think my team and I are very proud. We're one of those who pioneered social media about as early as about 8 years ago. So you will see a very wide spectrum of, I think, landed properties being marketed, okay, and our activities over the years. Okay. All right. So we're talking about, this is not the first time we're doing this landed webinar. As early as about 3-4 years ago, we have been publishing, firstly, a quarterly market results to share with our consumers. I think a landed market is quite a deep hole. Okay, it's a gray area because it's often overlooked by even the media as well. Firstly, due to this being one of the most niche segment, property segment in the market, but also because there's also lack of a very comprehensive data as well. So due to this, we understand there's a gap and there's a need by both our buyers and sellers. And so we have been publishing and studying and publishing this quarterly market results, okay, for every quarter for the last many years. And since the pandemic has started, we have also taken on a new format, which is to share with you in a more, I hope, interactive session like this, to also reach out to more people at the convenience of their own home. All right, with our first this consumer webinar about 2 years ago. And since then, we'll be doing this every quarter. So it's good to have you back again on our third quarter, or the third edition for this year. All right. So if you missed the last session that we had in July, 3 months ago, where we touched on the Q2 landed market analysis, where we spoke about and discussed about the power balance between buyers and sellers. It's a very interesting topic because we even internally we have a good debate as well, because we represent both sellers and buyers, and we are feeling the ground and starting to feel that this is what we call like a power balance shift, all right, starting to change. And this was elaborated in detail in this particular webinar. And if you want to catch the video recording, you can always just scan this QR code here. It'll bring you to a YouTube channel for you to experience what was being discussed. All right. And speaking of which, I need to also first share with you that today, pardon me, let me just come to this first. All right. So first disclaimer, one thing about landed data, even from URA, that's where we get our all our data, the raw data to analyze. We need to understand that the data moves. Okay. What I mean by moving means is that is very live. Even 1 day difference, you will see a transaction because they record data when they are exercised. So the data keeps moving. We used to do this on the first week of the month and realize the numbers keeps changing. So we've decided to then wait for about 10 days before we download the data. All right. So this is pardon me, this should be October. Right, typo error here. So we just got the data as early as recent as a few days ago. Okay, and of course, while we tried our best to provide the most accurate data, we will seek your understanding that in no event will we be held liable in case any of this information is used in your decision making. All right, I hope this doesn't discourage you, okay, from seeking discussions and advice from us based on what we know from the market. Okay. So before we begin, let me just probably can have a quick poll. Maybe you can share with us, or maybe you would like to know, is this the first time you are attending this webinar? So let me just do this, and perhaps let's just have an understanding. Do we have a lot of repeat clients or supporters? Or you have already answered, make a decision and you moved on. Some of our clients, after making the decision, purchasing or selling, they are still very involved. They are still very active, all right? And in terms of they want to continue to know what's happening in the market and appreciate it, giving us a lot of feedback. Say, please continue. I will still continue to support, and I would like to know what happens to the market, all right? So just a couple more seconds. You can see here. So we have right now, it's a good 50-50, all right, about 54% it's the first time, 46% is the second time, which is good. I hope those who are attending the first time, and I'm sure you're invited by my teammates and I or the other Huttons. Okay, let me just see whether you can see the results. Can you see the results now? All right, 59, sorry, now tilting a bit to 60-40, okay. Does this change what we're going to share later? Obviously not, but I think this will give us a good perspective because every time we have a majority of the participants are all first timers or first time attending, okay, which we welcome. And let me just move on. Okay, now this is the sequence for today. We are always very ambitious, my team and I. We're going to cover as much as we can. In fact, Huttons has given us a 1 hour slot, and every time we request to have it longer because frankly, if I were to show you the whole deck of information, is more than 150 slides. Okay, so but my teammates and I, my ICs, will try to condense as much as possible and to give you a breath in terms of not just total market overview, but also a more in-depth look at the East region, the Northeast region, Central region, and etc. All right, and to which then you can understand what happens, at least the key findings in each region and the main districts. And at about 9 p.m., 1 hour or 15 minutes later, we will talk about the main topic today, which is the tipping point coming? Some of you are attracted to this topic and really wants to know what is our point of view on this. All right, and if there's some time left, it will be conclusion and of course the Q&A. All right, so let's start. What happened in the last 3 months in the landed market, right? This is a very quick and comprehensive overview. Now, the first chart is to show you both a value and volume, all right, together and spread across the last about 12 quarters since 2020, Q1. So the blue line, this actually is a line that represents value, all right, value. And you can see that since the pandemic, all right, from Q4 onwards, it has been rising very steadily, all right, and consistently across the last many quarters. And now we are at a growth, yes, reported growth of 3.9%, and we have crossed $1,700 per square feet on average. Now, at this point, I just want to highlight there are newspapers, I think as recent as just last week, there are other indicators or reports as well that mentioned median, all right? The way they measure, because the mode of measurement is different, they actually use the median price. to us and also feedback from a lot of consumers, they would prefer to know the average price. All right. So, and it's expressed in PSF. Other reports may use the PPI method, which is basically it's an index, so which we, as a stakeholders in the market, we don't find as useful. All right. So this will be an average based on all the transactions and that has been transacted. And we're talking about 400 transactions here, right? Every quarter. So while prices have increased steadily and record yet another high, again, I mentioned this is the first time in the history of Singapore that it crossed $1,700 per square feet. And the volume, however, has not been that consistent. Okay, you can see that the volume actually peaked, okay, in 2021, last year, Q3. After that, there's been a steady decline with a slight revision in the Q2 and down, and Q3, we can see this value is down again at 410 units. And this is the lowest, okay, almost the lowest. In fact, it is the lowest since the peak started, right, at the start of the pandemic. All right, so this is now a minus 16% decline, okay? And this compared to, if you account for seasonality, because every quarter may be different, like for example, the first quarter and the last quarter usually is a bit quieter due to a festives, and Q2, Q3 is usually the peak in terms of volume. So if it's just for seasonality versus last year, this is a good 50%. If you can look at this, this is Q3 versus last year, which actually transacted more than 800 units. This is about half, right? Half. What does this mean in terms of the individual districts and the segments? We shall see in a while, right? Next, okay, now this is the very important summary where you can see the 3.9% and the minus 16% now expressed in the different sub-segments. Which are the sub-segments? Firstly, let's take a look by value first, all right? In 3.9%, so you can see this is not spread equally across the three landed house types. So from the detached to semi and terrace, you can see that actually detached has grown much higher than 3.9, in fact, registered 11%. Semi-D is 4%, and then terrace is the one that's actually growing the slowest, all right, although it's reaching almost 1,008 per square feet at an all-time high. All right, by volume wise, okay, minus 16% actually is mainly brought about by the bigger houses, the semi-D and detached, whereas terrace is actually the best performing or the least worst performing, if I were to put it in this way. All right, so almost a flat. So the number of lenders, terraces that we transacted is actually quite consistent compared to the previous quarter. Okay, now coming back, if we were to split this further in terms of value, let's take a look at 3.9 again, of which we split into the freehold / 999. Right, of course, this includes the 956 years, etc. We lump them together. Actually, there's a growth 4.3, and the 99 years has continued to grow. And this is the first time we see 99-year landed properties, all right, crossing the $1,300 mark. Not too long ago, just about 2 years ago, 1,003 is like the average for landed properties in many districts. Okay, right now we see the average of 99-year properties crossing 1,003. So gone are the days where you can get $1,000 per square feet or even less. All right, basically the 3-digit. On this note, I would also like to point out that the data that we analyze are only for landed. Okay, that means landed properties that does not include cluster. So landed clusters that do not have land value are not captured in this data. All right, so all these are purely landed, which makes up basically more than, you can see the volume here under strata total landed, all right, almost 70%. Okay, then next, let's take a look at basically new and resale. So what contributed to the 3.9? Basically, the new houses now have crossed $3,000 per square feet, okay, with a growth of 12.5%. Whereas resale, which is the bulk of the entire transactions, almost 90% from resale is about 5.2. All right, now it's crossed the $1,700 per square feet as well. Then if we look at strata, actually strata now, the cluster landed, they actually remain flat at 925 per square feet. All right, 925 per square feet. All right. Next, we take a look at the volume, minus 16%. You can see in terms of transaction-wise, basically the one that caused the drop is, and transaction volume is freehold and 999, minus 17%, whereas 99-year is flat. About 80 units have been transacted from last quarter to this quarter. Among the new and the resale, of course, resale will take up the bulk, and then new houses, due to lack of supply, a lot have actually been purchased, and I think also developers have a hard time trying to replenish their stock. So we see less transactions in this quarter, all right, versus the previous one. and strata landed has also maintained. So you see basically the 99 years and strata landed kind of have a certain fate in the last 2 quarters, all right, maintaining a flat growth in terms of volume. Okay, I hope this is a good summary for everyone. Next, let's take a closer look at this terrace versus semi versus detached. Now, in a graphical form, this will show you how the relationship has been. So we talk about detached just now. This is the one that grew the most at 11.2%. So detached, and one thing that's interesting, what has happened in the past was always detached having the lowest per square feet, because the larger the house, the lower the per square feet, right? Which is consistent with condos as well. But increasingly, you can see this being reversed, all right? Or you can see detached houses catching up with semi and terrace houses over the last recent quarters. So now you can see detached is at about $1,007, all right, $1,700 per square feet, which is even higher than semi-D, even higher than semi-D. This being lower than terrace is not a surprise, okay? But being higher than semi-D, this is something that is not usual in the market. Another unusual thing is you can see that all 3 asset class or all 3 house types for the first time are converging very closely to between the 1,007 to 1,008 mark. All right, between the two, we're talking about $100, $120 per square feet only. All right, in the past, you will see much bigger and much starker difference among the 3 house types. So to us industry players or even stakeholders, it's a lot easier to remember. Average is about 1,007 to 1,008 per square feet. Of course, there are different types of, within the 3 types of houses, they will differ as well. It doesn't mean every landed or detached house is 1,007. There's those that has transacted as high as more than 3,000, and then they have the lower ones as well, depending on many factors that were mentioned in previous this webinars, things like the size, the age, the built-up area, all this will affect. Okay, so which I'll let the ICs later explain further in terms of their analysis by districts. Okay, next will be by house type, the volume. So you can see detached dropped the most from 62 to 41. Semi-D dropped by minus 26%, and we see terrace having a hovering around a very healthy 240, 250 units, okay, per quarter. So right now, I think this is still the volume generator among the different asset class. Okay. Next, we will take a closer look at freehold 999 versus 99 years. So just now we saw already for 99 years, the value has crossed. Can you see just at the earlier end of this, about 3 years ago or 2 years ago, 2.5 years ago, is under 1,000. It is true. Before the pandemic, a lot of 99 years are all below $1,000 per square feet. But now, due to shortage of supply and also a widening gap between freehold and 999, freehold and 999, you see a lot of buyers now aspiring first-time landed owners going towards 99-year landed properties, which are a lot more affordable. Most of them are within the $2.5 and $3 million mark, all right, or if not even lower. Volume is still hovering at about 80 units, which is still quite healthy, all right, considering that in terms of the supply in general for 99 years is a lot less compared to the freehold 999. Okay, so again, this is based on, for freehold wise, we have about 300 plus units being transacted. This forms the bulk actually of the reduction. Okay, and also that you see a new benchmark or a new high being reached at $1,845 per square feet. Okay. Next will be between landed and strata landed, we mentioned earlier or seen earlier. So the value increase is not as much compared to the freehold ones, also compared to the landed ones per se. There might be still some resistance in terms of the image of landed versus strata landed because you don't own land, but also increasingly this has not stopped the price from also increasing as well. All right. So if you notice, this has shown a reversal. We look at this part. This was actually a reversal. It actually declined in the last 2 quarters versus landed, which has risen steadily over the last 7 to 8 quarters. All right. Volume is stable at minus 1%. Okay, next will be new versus resale. Again, we have seen how this is for new houses, right? New houses is a lot more unstable because of a smaller sample size, although most, or if not almost all new houses now are transacted across above $2,000 per square feet. All right, but this quarter or the last quarter was the first one that we see the average price crossing $3,000 per square feet for the first time. All right, One reason is this is to match of course, to account for the rising cost that has to be borne in terms of material cost, labor cost, and frankly, even for the land cost. These three components are making it very difficult for developers, right, to sell below or close to a resale price. Otherwise, not just only there's no profit, but I think in terms of covering their costs will be challenging. Volume has dropped by 5 units to 7 units. And this based on the pipeline of new houses coming up, we don't foresee this to grow in a positive note, because there's due to a shortage of supply of such new houses being in the market. Next, resale, which forms the bulk, okay, 403 units. So as mentioned earlier, this is the first time it has crossed. You can see resale has grown very steadily. And basically this chart mirrors the total landed chart because it forms the bulk of the entire market, right? Now, next, we're going to go to analyze the market by regions and by districts, okay, by regions and by districts. Now, as I mentioned, we cover many regions and districts. So these are the 11, all right? I'm going to pause here for a while to just take a look at this. So we cover from between Central region, which is 10, 11, West, 21, 23, East region, 13 to 16, and Northeast region, 19 to 28. So if you come to this side, you can see firstly that the average price of 1,700 is spread. How is it spread across the various districts, all right? Unsurprisingly, District 10 and 11 continues to hold basically the pivotal point at the top of crossing $2,000 per square feet. But this time round, this quarter, we have a new entrant in the $2,000 PSF mark, which is District 15, right? District 15. And closing up is actually District 21, District 20, District 13 as well. Although there are different reasons that account for this, and I'll let ICs explain later. All right. So those that cross the 1,008 besides these two is also District 20 and 19. So now you can see that this used to be as early as, if you can see, just about 1-2 years ago. Even crossing 2,000 for even 10 and 11 is not easy. It's not a common sight. But right now you see a lot of all these suburban districts, non-prime districts also crossing 1,000, if not $2,000 per square feet. All right. Among these, the one that grows the highest is District 10 at plus 9%. Pardon me, is District 19 over here at plus 18%. Later, Sean will explain to you what has contributed to the phenomenal growth and to reach a new benchmark of $1,008 per square feet. Very near to 20, which I always say is a cousin of a very good alternative for a lot of District 10, 11 buyers is at District 20, because that's very close. And it has also about to cross $2,000 per square feet. This has shown a growth of 10%. All right. The weakest performance in terms of price growth will be District 11, but later we will explain to you what caused this drop, okay, of 6%, and of course District 23. Cindric will cover that as well. Right. So now let's take a look at transaction volume. Now, transaction volume here, let's focus on basically the blue and the reds on this side. Okay, so here despite having a drop, there's still a few districts that defies the market norms. All right, we have District 13 showing a phenomenal growth of more than 50%. And District 10, all right, District 10 has also increased as well. And then we have District 23 and 19, which are flat. The rest have reported a decline, which is consistent with the total market, right? Going by regions, you can see that actually the best performing region is still Northeast region, right? Northeast region, followed by Central, West, and then the East region. And the non-GTA regions, basically those regions that are out of these 11 districts, all right, which are less than 20%. You can see that the growth, usually if you're not in the prime areas that we target, will tend to grow the slower, will be affected the most when there's a so-called downturn in terms of volume. Okay. All right, so based on this, perhaps like I mentioned, my teammates will be dwelling a lot deeper. So among perhaps all of you here, you could share with us what is the district that or region that you're the most interested in. Let me just get the poll started. Okay, take a few seconds to help us to understand which region or district are you the most interested in, or where it could be where you are staying, it could be a place that you're targeting to buy next, or you are actually staying there now and you're thinking of selling and switching to another region. All right, I think increasingly in the last this year, for example, when price changes is quite drastic, we see more and more people considering cross-region, cross-district change as a result of price. Of course, the needs is something that cannot be overemphasized, all right? Because if they are changing because of schools or because of certain areas that they want familiar or family support, that will not supersede, I think, the changes in terms of price. Okay. Let's see, we shall end this in a while. Let's take a look. From now, it's quite a mix between Central region, East region, and Northeast region. All right. Let's take a look and just to share a few of the results. Okay. Unsurprising because Northeast region, Central, and East are basically the three main regions in terms of supply and volume. And a lot of you might be staying there as well. Okay, so this won't change. Again, I will focus on what we're going to present, but I think this at least reaffirms the fact that we have prioritized, all right, correctly in terms of the next few slides that we're going to share. Okay, now with this, I believe we shall now go to the highlights in the different districts and regions. And again, I'm going to introduce my team again. From the first region we're going to touch on is basically the East region, and that I have 3 ICs who are in charge that will share with you. All right.
Hi, good evening. I'm Jason here. Yeah, covering the District 13, some highlights. Okay, basically District 13, those who have not attended, for the benefit of those, District 13 cover basically Brother Height, McPherson, Senior Estate, and McPherson Garden. Yeah, and okay, what I have shared last quarter, actually the District 13, the terrace below 1,007 have grown, and this quarter it continued to grow for those less than 1,007 square feet. Yeah, so you can see that the number actually grew from the last quarter of 9 to 18. So it's almost 100% growth. And where's the growth come from? Mainly from Senior Estate and McPherson Estate. So this is what you can see. So this area, what you can see on screen here, basically covering mainly Senior Estate. As you can see, most of them are actually 1,005, 1,006. So all are actually below 1,007. And it continued to grow. One of the reasons why I think a lot of people is looking at this one is because of the lowest quantum. Yeah, the lower quantum, looking at it because of the price of the landed have increased. So this area generally cover a lot of those lower quantum price. One of the reasons is because the land size. Yeah. Okay. Second highlights to cover. Basically, you can see that actually there's also a big jump in terms of PSF for those less than 1,000 square feet. Having said that, just now on the portion where less than 1,007, so this area, this area will be covering more on anything below 1,000 square feet. And just McPherson alone, we have actually 4 transactions. And as you can see here, as high as 3,000 PSF, which is a lot. And the land size is only 884, which is less than 1,000. But of course, you can see, especially this one, is kind of moving condition. That's why it's fetching so high, and quantum-wise, it's below 3 million. So a lot of them actually coming into this area. Yep. So you can see all the few over here that is shown here. Basically, you can see all are below 1,000 square feet, and the price PSF is already easily talk about minimum 2,003. So, which is a very big jump here. Yeah. Lastly, as we can see, if you continue to see this slide, we are seeing the price range hovering between 2 to 3 million as compared to previously. We are seeing like probably below 2 million. But over now, we are seeing, as you see the comparison, Q3 and Q2, this quarter is alone, we have 14 units closing at between 2 to 4 million, which is about 56%. Yeah, as compared to Q2, Q2 actually spread out. But for this quarter, generally, the transacted value is hovering between 2 to 4 million. These are some of the unit that is closed. Again, mainly on spread senior estate and some even to the Brother High. As you can see here. Yep. Okay, so I'll pass to the next speaker.
Hi everyone, I'm Justin here. Thanks for Jason earlier on. He touched on District 13. I'm going to touch on covering District 15 to let you have a feel of the what's the market pulse for District 15, right? So I'm going to bring you to see some of the 3 highlights for District 15. Well, for our analysis purposes, we actually dice District 15 into 4 zones, namely Katong, Chucha, Teluk Kurau, and Siglap. So the analysis that we've done so that we can know how does each zone perform. Now, the first highlight that I'm going to brought to you tonight is the sharp rise in average PSF for all class of landed houses in District 15. They are all actually crossed 2,000 PSF, as you can see. So on Q2, it's only 1,885. For Q3 this year, it's already crossed 2,065, so with an increase of 6.5%. Now let's take a look at which are the class of houses that actually crosses 2,000. Now, as you can see from the chart above, you can see actually is contributed by terrace and semi-D. Terrace already crosses 2,000, which is 2,193, 11.3% increase. And for semi-D, is touching the 2,000 point. Now the terraces, if you were to go back to the analysis that I bring you on earlier on the chart, we will see that all the zones, the PSF has all increased and has all crosses 2,000 also. So let's say for the Katong side, because only got 1 transaction this quarter. Now let's look at Chucha, Teluk Kurau, Siglap has all crossed 2,000 and the increase is 11.3%. Semi-D, nevertheless, if you can see Katong, not surprised because Katong is always a premium in District 15. So hence the prices there has always been it's very well received and very sought after. So prices there has always been crossed 2,000. Then for Teluk Kurau, Siglap, Teluk Kurau already crossed 2,000. But this one again, Teluk Kurau, this may not represent the full picture because it's only 1 transactions in Q3. But it was sold at above 2,000. And for Siglap, it's actually inching up to 2,000, which bring up to a 7.8% increase compared to Q2 2022. Now let's take a look at this chart. We are still on point 1. You will see we are trying to break it down like how many transactions that is happen or transacted at between the PSF. As you can see at the bottom, which I actually highlighted. It actually in Q2 2022, out of the 66 transactions, 21% are above 2,000, which account for 32%. But for Q3, although it's actually the same numbers, but in terms of the weightage, is already 55% of the total transaction in Q3, which the total transaction is about 40 units. So as you can see, like in District 15, roughly you will know the PSF now in average is actually above 2,000. Now, second point I'm going to touch on today is let's take a look at what are the PSF like for a brand new semi-D, right? So semi-D, as you can see now, on the left-hand side, easily For Katong side, easily about 8.9 million. If you want to get a semi-D in Katong side, for Telok Kurau is about 4.3. And again, like I said earlier, this is only one transaction, so it does not represent the full picture. For C Club, it is about 6.6 million. So in average, about 7 million, 15.8% increase. Like for PSF, I've touched it earlier on, so you can refer to my slide earlier on. So let's take a look. These are the transactions. Okay, this is actually happening in this year, 2022. Like the very first quarter, Mountbatten, new one was selling via 4 plans, already transacted at 3,000 PSF. So so this gives you a bit of idea. If you were to get a semi-D now in District 15, you got to pay like above 3,000 PSF. Like what Jason had shared earlier, even for smaller lands, terrace house already cost 3,000. But this is actually, you're getting a new semi-D in District 15 is 3,000. So the record PSF clock is actually at number 2 East Coast Terrace, which was transacted at 7.3 million and 3,244 PSF. Now, number 3, which I'm going to touch on today is Right. Okay. It's the significant rise in price for terraces, because actually, if you look at the whole transactions, terraces always crown the chart because they have the most in terms of number of transactions. So that's why I want to bring this up to you to let's see how is the terraces perform in District 15. Now for terraces, as you can see in my earlier chart, if you were to ask me now, how much would it cost to get a terrace in District 15? As you can see from the chart, right, it's about easily 4 million. So if you would look at like some of the land size about 1,006, 1,007 with a 3-story, easily you could pay above 4 million now. So, but the 2 quarters, if you see in terms of average value, is about at par 4.2 million, but the PSF has increased by 11.3%. Okay, now let me bring you to a more wider horizons. Let's take a look at 3.5 years from 2019. How does the actually price perform terraces for District 15? As you can see, the chart on the right hand side, right, is they are all actually on the rise. They are all on the rise, be it a value or be it the PSF. So I give you some examples like how does the price actually happening in like District 15. For example, I take this 37 and 27 Kisan Avenue. Okay, one is north facing, one is south facing, but nevertheless, over the span of 4 years, the price was back then in 2018, it was transacted at 2.6 million. But now in 2020 May, it was sold at 4.5 million. And look at the land size, they are very similar. The only difference could be the facing only. Let me take you to another example. Right, for this one. As you can see, this is actually the same house. So what happened is for this owner, for this actually the owner, he bought in 2017 at 2.8 million. But in a span of 5 years, it resell again this year at 3.55 million. So we're looking at about 27% increase in terms of the value for a span of 5 years. The chart earlier, let me bring you back this one. It's about like 70% increase in terms of the value. So this is roughly what is the price point and the PSF that happening in District 15 now. So I'm going to done with my presentation today. I'm going to pass on to my colleague Michael for the next presentation.
Good evening, I'm Michael, District IC 16. Before I share with you the 3 main key in District 16, let me look at share with you where is District 16. Basically, we got 5 sub area. Starting from the bottom is the Sept, Lucky Height. This is easily accessible from ECB. And the second area is Chew Drive and Jalan Limau. From past few quarters transaction, it commands one of the higher volume, about 30%, 30 to 35%. And on the right here, we have got the Eastwood and the Bedok rear area. The landed houses here about half of them are actually leasehold. So if you are looking for leasehold property, this is one area to look for. To the north, we have got the Tanah Merah, Kecil, and the Peakville, served by Tanah Merah MRT station. And right on top, on the right-hand side, is the Guan Sun, Harvey, and Sunbird area. And this is more closer to the semi-MRT station. Now, what are the three points that I want to share with you? Firstly, semi-D, the volume, just like the rest of the Singapore, has decreased. And here we are looking at Q2 versus Q3. There's actually a big drop of close to 60%. Right? It was 24 in the second quarter. Very unusual. Normally, it is the terrace that is transacted in more volume than the semi-D. And happening now in Q3, this is the norm, right? More terrace are transacted compared to semi-D. And while the volume dropped, the price increased. Let's take a look at what has gone up. If you look at Q1, semi-D is 3.9+ million, well, Q3 has gone up to 5.4. A difference is as close as 1.5 million. Just one quarter, you get that kind of difference. Average PSF. The same goes with to PSF. If you look at the column down there, 1172 for Q2, and it has gone up to 1379. With that increase, it actually brings up the overall PSF of District 16 to one of the highest. Right, last quarter was 1,032. This quarter I'm referring to is the third quarter is 141. That's the highest so far. Where are the semi-Ds located? As you can see down here, those in blue color, the difference between Q2 and Q3 is almost 1 million. In fact, more than 1 million, right? For Eastwood, Bidil, this quantum is low because most of the, or half of the property there are actually leasehold. Therefore, transaction value is lower compared to semi-D freehold, which is at Tanah Merah and Harvey area. To the right, you'll find that those are the area where the PSS has gone up. Okay, Q Drive area, Eastwood. And one of the highest that actually comes through is Harvey Sunbird area, right? Close to 1.43, right? A big increase of 33%. My second point that I want to share with you is that overall, the average PSF or the average price of District 16 actually has gone up. Q2 was 4.1 million and now it's 5.2 on the last quarter. This is significant because let's look at this chart here. If you compare Q2, there were 10 transactions below the 3 million, and this number reduced to 4. And 4 here constitute 15% out of the 29 that were transacted in Q3. The rest of the 85 are above the 3 million mark. And looking downwards, between 3 to 5 million, there are about 60% transaction. And right down here at the bottom, we have got quite rare transaction above the 10 million mark. So what actually caused that increase, which I will share with you the third point. And this is attributed to the high value transaction of detached, averaging 12.6 million. This is a very high record as compared to Q2, which is 5.7. Why is it so? A little while I will show you why this detached house has command such a good price. Now, if you look at the PSF also, in the past it was just about 1,000, 1,001, and now we are getting about 1,003 PSF. So together with all the increase of terrace, semi-D, and detached, it's a record, 1,432 PSF for District 16. And what actually is the factor that contribute to this high, right? You see this detached house transaction is 14 5.68 million. And it is quite rare to get this kind of price. It's not in District 10 or 11. And it's also that compared to this transaction with another detached, also in the same area, Harvey area, but the land size is also the same. In terms of quantum, the other one was transacted at 10.5. This is 14.6. And what's the factor? It's because it is a new structure. You'll find that those of you who are aspiring to look for a new building or new house, you need to have a deeper pocket because of higher construction costs, higher material costs, and higher marketing costs. With that, I will now pass on to my next colleague who will share District 19. Sean. Thank you.
Hi, good evening. This is Sean. Let's go through the Northeast region quickly, running out a bit of time. All right, for District 19, actually, we are covering 3 main areas. One will be the popular Serangoon Garden area. Next one will be Kovan, also covering part of Kovan will be part of Surin Chiltern area. The rest will be Paya Lebar, and the others will be areas such as Punggol and also Bartley Estate. All right, one interesting thing for District 19, in line with all the increase in the PSF, is that for the first time ever, we see the largest growth in terms of PSF above 1,007. All right, this is not unusual. And typically these are in the terrace areas where you see the terrace has the largest, one of the largest increase of 12%. All right, semi-D is also what is also unusual this round. All right. So for the PSF itself, definitely for terraces, they're helping to bring up the total PSF, and you can see increasingly the number of transactions breaching above 1,007 is one of the highest, right? And also, I think for the first time, we might need to explore expanding the more than 2,000 PSF because many transactions are actually breaching over 2,000 PSF. All right, so this is to put things into perspective. It's almost doubled in terms of those above 1,007. Again, it really reflects the appetite for buyers looking for those, definitely for terraces itself. All right, second unique thing is for the conflicting performance of the semi-Ds. We have seen actually a drop in terms of the quantum, but conversely, we are seeing a sharper increase in the PSF as well. So for PSF for semi-detached, we're seeing a rise also hovering close to 1,006. Okay, average size, again, typically with lower land size, the PSF should technically be larger. This is also related to the pyramid of consumption. So the lower the quantum range, 3 to 4 million, there'll be much more buyers. 4 and above, definitely the buying power is actually reduced. All right, third thing, for the terraces, we see the largest, one of the largest increase. And for the first time as well, you can see terraces breaching 1,008, and this seems to be continuing to go up, definitely with the shortage in supply for District 19, especially those move-in houses. PSF is hovering on the average 1,008, might continue to go up. So this will be a screenshot of all the areas that are covering in District 19. So again, you can see Serangoon Gardens is gaining back popularity compared to the last quarter. Last quarter, actually, Kovan was also picking up. This quarter, Kovan kind of maintained, but Serangoon Gardens are appetite in even for the 99-year leaseholds. They are actually breaching close to the 3 million and above mark as well. Okay, these are some figures. I'll just skip through this one. So comparatively, for 3 years ago, let us show you some case studies. So this was a house that was just recently transacted at, this is actually at Serangoon Gardens area, crossing the 4 million mark, also a terrace. Comparatively, just 2 years ago, all right, it was sold for 2.8. This is not the first time we have seen such phenomena happening in the landed market. So this is just one example of how in a span of just within 2 years, right? We'll see more of these examples in, I think, District 20 and 28 as well. Okay, for Kovan, this was one of the recently transacted terraces. This is a very immaculate unit, very moved in, very tastefully renovated one. We managed to transact it in one of the highest PSFs, but this is also very close to 4 million. So the appetite again for District 19 for terraces generally would be 4 million and below, where most of the buyers would reside. So comparatively, this was in 2019. You can see the stark difference, how much the market has kind of really influenced even on the same street. Okay, moving to District 20 quickly. Okay, District 20 is actually more sparse. So what's unique for District 20 is that within a 5 minutes short drive, we have access to many good schools from CHIJ, St. Nick's, Aitong, Catholic High, Raffles, and so on. Also for this, we are also surrounded by many nature reserves, the Bishan Park and the Lower Pierce Marriage Enclaves. Okay, so what we have seen that's interesting is with the recent changes in the primary school entries, a lot of parents are panicking right now. They're trying to get not only old boys, old girls, but they prefer to actually upgrade to a location that is within 1 km to the primary schools. So this is pretty evident for areas like Sampang Hills, where it's the most highly sought after for parents with daughters going to CHIJ. Similarly, for Thomson Garden, we have seen a resurgence in terms of the transactions. Last quarter, Thomson Garden did not fare as well. But that being said, areas like Thomson Ridge and Clover, where the supply is generally quite low, it's not surprising to see the numbers taking a dip in relation to the overall market. All right, and again for District 20, for the first time, we are almost on par to as close to Central as possible, right? So being the location-wise, we are very near to Central, but yet you see the PSF has been creeping up quite significantly. So for District 20, for the first time, terraces breach the 2000 PSF, and the average also for the semi-Ds have crawled up quite a fair bit. We'll dive into a deeper analysis for some of the semi-Ds, which actually a lot of buyers are still currently looking out for. All right, so again, we are closely reaching the 2000 PSF on average. All right, and what we are seeing for the Northeast region, in fact, is there seems to be a shift in the purchasing habits. So in fact, a lot of transactions occur from the 4 to 6 million mark. And actually, we are generally seeing very few buyers breaching above the 7 million, as you can see evidently from District 19, 20, and later we'll show you for District 28. Okay, this will be a case study of two very similar semi-Ds in District 20. One is at Sampang Hills Estate, Jalan Rukam. The other one will be all the way at the other end at Thomson Ridge. So land size condition is quite similar, also transacted within the same month. So within these two units itself, the difference in the PSF is almost about 350 plus minus. All right, so these are in original condition. So another example would be a developer unit. They actually bought this 58 Clover Crescent back in 19. This is at 1007 PSF. So factoring in their DC charges, the increase in the construction costs and everything. So recently, one of the semi-Ds, also around 3,000 plus square feet, transacted at 2352 PSF. So this seems to be the new frontage, the new frontline PSF for brand new semi-Ds, especially for District 20. Right, so you can see again the difference between within the district itself, there's such a huge gap in terms of the land value as well as the cost of the brand new house. So this is another example. This will also be in Sampang Hills Drive. What is unique is this house actually comes with a basement and a lift. Right, this has been in the market for quite some time. Okay, so ultimately this was finally sold at 6.15 million at 1008 PSF. So the $500 PSF difference as opposed to something that is original condition, factoring in with the basement and lift. All right, this begs the question as to ultimately what would a brand new semi-D cost in areas within District 20 that's outside of Clover. Okay, with that, I'll hand over my time to Will to cover Central.
Hello, hi, good evening, everybody. So I'm Will here. We'll be covering D10 and D11 tonight. So moving forward, D10 has been divided into a couple of sectors. Okay. And same goes to D11. D11 we also is also separated into cover certain areas such as the Swiss Club and Daniel area, as well as the Novena area. Yep. So we something interesting that we want to highlight to all of you guys. So today you can see the terrace house type. Okay, sorry. The terrace house type. The terrace house type here. Okay, the terrace house type here was the terrace house type. Okay, has transacted close compared to last year. Last quarter, Q2, the terrace house type was hovering between the 5.7 million mark, whereas in Q3 it's hovered somewhere around 7.2. And take a look in the semi-Ds. Yeah, semi-D for Q2 we are transacted about 8 mil, which is about 1 over mil difference compared to the terrace. But this year, as you can see, the price for semi-D has dropped relatively quite a fair bit, close to about a million, about 900K. So today we'll see that terrace houses and semi-D is about the same price. Both for Q3, both terrace and semi-D has transacted at 7.2 million on average. So the next thing I want to highlight is actually a double-digit growth for houses around between the 6 to below the 7 million mark. If you can see Q2, okay, during the Q2, we have two houses that are transacted at about less than 7 million, but this quarter Q3, we have 6 houses, which is double the jump or triple the jump. Yeah. So same goes to D11, okay, District 11. Similar thing appeared, similar occurrence appeared for two houses, okay, for Q2, but whereas Q3 we have 4, so it's actually a double digit. Yeah, so some of the house to show you guys, some of us, in fact, most of the unit transacted are mainly semi-Ds, okay, just for info, and of which one of the houses in here has transacted twice within a short period of 2 years. So same goes to D11, same thing. We got a 3 example here. Again, there's a unit here that transacted twice as well, just for your info. Next is the GCB house type. Okay, GCB house type, as you can see, during the year of 2019, the average price, okay, was about there in the middle of 28 million, and same goes to in the year of 2020. But moving forward, okay, to 2022, this is a total figure, average figure based on Q3. We are around 25 million mark. Yeah. So would this carry to perform, with the GCB segment carrying to perform as good as last year? Would let you all guys have a think about it. So here are some of example of this couple of house that's been transacted in the number of years. 63 Belmont Road in the year of 2019 at the PSF of 2006, and of course 40 Clooney at the PSF of 2003 for 2020, and 2021 we have our Clooney Hill that transacted at the highest PSF of 4,002 PSF. As moving forward to 2020, we have another house at the White House that actually transacted at $3,000 PSF. For now, I will hand over the mic to my next colleague, Cindric, to illustrate more on D21 and D23.
Thanks, Will. Okay. Hi, everyone. I'm Cindric, and okay, I'll be touching on District 21 and 23. So these are the 3 highlights I'm going to touch on. First, let's look at the area for D21. It comprises of Toh Yi. These are all the sub regions for D21. You have Sunset, you have Upper Danien area, with Jurong Kechil area, Toh Yi area, etc. All right, so and then the D23 will comprise of Burgundy and Verdi, which is a big chunk of today's highlight. Will be touching on this location because they are the 99-year leasehold enclaves. You have Hillview area, you have Chestnut and Choa Chu Kang area. First, let's look at District 21. Interesting point to note for D21 for this quarter is the semi-Ds are actually bucking the trend for D21. For the more detailed data, if you need, we'll send to you. If you look at District 21 for this quarter, all the different house types are down in terms of value and PSF. However, for the semi-Ds in D21, they're actually bucking the trend. We actually are witnessing increase in value, so they're still going up, and of course, the per square foot wise. All right. So, and these are the various sub region for D21. You've got Jurong Kechil area. The value for the average prices are for the semi-Ds are still inching upwards, and Toi especially quite significantly at 40, close to 44%. Okay, so overall, these are pushing up the semi-detached performance for District 21. Okay, as you can see, the PSF all have increased for District 21. So the next highlight I want to talk about from the houses from D23. Now there's a rise in demand for the 99-year leasehold houses for D23. D23, if you know, it's an area where most upgraders are looking for when they first look at their first landed homes, and a bulk of it goes to the 99-year leasehold houses. So okay, you look at the first red box up there, Burgundy and Verdi area. Why Burgundy and Verdi? Because these are all the two biggest 99 leasehold property landed enclaves in D23. So the volume wise has doubled, and overall the whole district, the 99-year leasehold has increased by 70%. Okay, so let's dive deeper into these two locations, Burgundy Hill and Villa Verde. Okay, the trend is evident here. As you can see, the per square foot wise for the terrace houses have increased by 20%, and the semi-detached houses are all from mostly from Burgundy Hill. They have gone up by about 13%. All right, so the third highlight I want to point out also comes from District 23, and that is most 99-year leasehold prices have actually crossed 2 million mark. Okay, so gone are the days where you can find a 99-year leasehold property for below 2 mil. So most of the transaction here for this quarter, they've all actually crossed $2 million. Okay, so as you can see from this table here, and okay, more evidently from this, some of the examples we can see here, the Verdi inter-terrace. These are all inter-terraces, by the way, and they've all crossed the $2 million mark for leasehold properties. So there you have it. This is what we have for you for District 21 and 23. I shall now hand the time back to Willie, who will wrap things up for us tonight.
Me. Okay. Thank you, Cindric, and of course, my team of VICs. I hope through this very comprehensive session that you have gotten a much better understanding. Like I said, we really wish we can have more time to share with you more, but if you need more information, just go to Huttons Consultant or any of my teammates from Huttons Lender Consultant. All right, they're really a lot more. Once you look at the data, it's really quite fascinating. All right, even in a short span of 3 months, a lot of things could have happened. Now, after diving so deep in, now let's take a step back and take a look at the bigger picture, and to which we'll come to today's main point, which is the tipping point of the landed market coming? A lot of you have asked, not specifically about what it means. Of course, we know the prices have been going up. A lot are expecting, are we talking about whether the price will start to turn from now onwards, all right? And of course, we cannot talk about this without mentioning the latest cooling measures. We didn't plan this, to be honest, as early as 2 weeks ago when we were doing the charts and when the cooling measures came out, and then realized there's a need for us to understand, all right, whether the cooling measures will actually affect. Now, this current cooling measures is a bit more interesting and debatable, polarizing to a certain extent. Okay, so maybe before we proceed, maybe we can just do a simple poll. What do you personally think about this cooling measures before we share further? All right, do you think, very simple, do you think this will affect the lender market, since you all know the measures are mainly targeted at HDB, or do you not think so? Okay, let's do a simple poll here. Do you think it will impact the lender market significantly or not at all? All right, because even, to be honest, within the team, we had a quite thorough discussion that was 2 weeks ago when it was launched. It's only upon observation for the last 2 weekends, listening and speaking to our clients, do we have a more confident so-called analysis of what's going to happen. All right, so okay, we have, which want to know the answer? Right now, the scale is tipping at, let's just share this openly. Okay, so about 70% of, I think the audience here think it will not affect, whereas 30% think so. Is it right or wrong? Firstly, we don't have the, basically a glance at the future, right? So let's take a look and see what is our, what do we think? Now, firstly, to understand this, there are two key principles. Okay, there are two key principles about basically how the market moves that we have mentioned and emphasized many times. Very simple in terms of market price wise, always just have to understand the relationship between demand and supply. The higher the demand, the price will go higher, higher the supply, price will go down. It's inverse relationship. All right, this is not new to most people. So using this, we have in the past many sessions, okay, have attempted to and correctly predicted basically the impact. All right, so just to go quite quickly, won't go into the details because this has been covered before. We talked about the COVID effect for the last few quarters. Okay, so for example, like the demand for more space, privacy, due to COVID, all right, having safety, you want more family members to stay together, etc., which created an ongoing upgrading trend. This has been evident and enough has been said and also reported, has increased the demand, and that has really started this 7 to 8 quarters of increase in price. Right. However, so in the last couple of quarters, we're also starting to analyze and study this increasing gap between sellers and buyers, because ultimately there will be a level where basically the expectations between the two will fall apart, and we are starting to see this slowing down in terms of transaction volume. All right, at the same time, we also see actually in terms of supply, there will be a reduction as well, because a lot of our owners decided not to sell, because when they sell, they can't find basically the next house that fulfills their budget and what they want. All right, so you have basically two opposing forces, but you can see the arrow here is slightly bigger in demand, and this should have a slightly downward pressure on price. Okay, what is new this year that is unexpected is rental market reaching new heights. This has actually reduced the supply, because a lot of our owners have decided to then, instead of selling, why not we rent it out? I think the most evident or most startling or the benchmark setting is the GC market. I'm sure you've heard about GCBs costing more than $200,000 in terms of rent, for example. So owners like them, oh, we can rent, I can earn $2 million a year in terms of capital appreciation. Why not? Why should I sell it? This will reduce the supply and making these houses less accessible, and hence increasing the price. Okay, so this should be quite clear, all right, in terms of this COVID effect, which is before. All right, now the next principle that we want to take the opportunity to introduce today is this interrelated effect across the various property segments. Okay, what we mean is that firstly, you have to understand that Singapore is a very small market. Okay, and usually if you have understood or witnessed how property markets move, when one segment moves, like basically HDB market moves, you won't see condos and landed not being affected, vice versa, right? But because we are so close in terms of physical proximity and also in terms of the capital, so-called exchanges, it is inevitable that one change on a segment will affect the others. So I'll give an example, right? So this is within landed. Okay, this is within landed. We have basically the top, the GCBs, then the detached. The percentage stated are basically the proportion of houses that are sold in this specific class. So we have terrace making up more than half of all the transactions, okay, in this year, not this quarter. Semi-detached, detached, then GCB. You may say that GCB, for example, okay, this is very small, right? We're talking about double-digit transactions, for example. But if you look at the quantitative value, all right, so basically from here, what happens is that GCB owners, so it's sale or transactions, would result in a lot of them downsizing, and this money will then flow down. All right, will then flow down. We have personally witnessed, I can't tell you which house owner, which used to be 40 million, now so at 50 million. When they downsized, they could afford to buy what used to be 10 million. Now they can buy something 15 million, for example. This money will cascade down into the so-called mass landed market. All right, to give you an example, so this is a, you can see the numbers here. All right, this is between, pardon me, 2020 and 2021, right, which is the precursor to basically the rise. You can see there's an increase of double in terms of the number of transactions. More importantly, in terms of value, you can see more than $1.5 billion, all right, of transaction was transacted in basically 2021. Where would this money go to, right? Not usually, more often than not, it flows back then into the other rest of the market. So like the detached, semi and terrace, they will benefit from it. And let's not forget this doubling of this so-called transactions. A lot are new entrants to the market. We could spend another hour talking about GCBs, like who bought what and why are these new entrants. You have your basically the technopreneurs, you have your new citizens, naturalized citizens as well. These are new money that enters. It doesn't come from basically the detached upgraders, for example. All right, so these are new funds that come in. Now, same reason, all right, there's also an upgrading effect, meaning, so if you look at terraces, okay, same years between 2020 and 2021, you see the transactions has increased by 65%, and the value is almost doubled of that of GCB, almost $3 billion of new transactions in terraces, which are brought about by basically a lot are actually upgraders. All right, are actually upgraders. So this downward effect and upward effect is going to channel basically the capital flow, all right, of this within the landed estate asset class by itself, right? If you were to, however, look at a bigger picture, remember we are not alone in this landed market, even though landed market accounts for about 4%. This is based on latest statistics, and we have condo about 44%, and you have HDB, which is more than half in terms of the transaction volume. All right, let's not forget about this effect as well. We were just looking at landed, all right, but within landed, imagine the flow that comes up basically from the HDB upgraders, from the condo upgraders buying to landed, especially the terraces, and also landed owners downsizing towards the mass market non-landed properties like condo and HDB. And you've seen enough probably reports of record high HDB or $1 million HDB properties, more than 200 this year, for instance, just for the first 8 months, that crosses the same number as last year. A lot of them, a high proportion, was actually by landed downsizers. We ourselves have personally transacted a few. Okay, so if you take a look at this, same thing as well. So if you look at the same index for within the same period, right, pre or during the heat of the pandemic, you have condo increase in terms of transactions of about 14 or $15 billion, and HDB about $4 billion. Now, all this is, which is referring to this arrow, all this money are going to flow back into the total residential property market. Hence, you don't see prices dropping, right? Whether you're talking about first entrance into the HDB, PRs, for example, buying HDB for the first time, the Malaysians, for instance, the money will come in HDB, flows into condo, condo will flow into landed, etc. If you have a good understanding of this, you will understand that basically the recent cooling measures will not be isolated, or landed market will not be isolated. All right, but let's take a look at this first, potential effects. So the influx of top to bottom and bottom to top money, what we said, This has resulted in increase, all right? If you understand how landed market at the top is the most aspirational asset class, money always goes to the top, you will see that price has increased. And we have seen quite evident in the past of the many analysis that we've done. Now, let's then focus on the latest cooling measures. If you understand these two factors or these two principles, what does this mean? Those who said, I think there were 70% of you who said that it will not affect, right? But let's take a look whether you will change your answer. Now, let's take a look a bit more deeply, but we won't go too deep into that. So these are the three measures. First measure is about the change or increase in TDSR and MSR calculation, right? So this will affect or reduce the maximum amount a borrower can borrow from the banks. Now, 5% or 0.5% may not, if you don't quantify this, it's very difficult for you to understand. So we've done some simulations, again, without showing too much of the details. We've done a couple of scenarios. So this is based on a terrace's average buyer's age, which let's say if you are 40 years old, taking a 25 years loan, all right? What we need you to see here is that the change, can you see, it is based on 30,000 income, all right? The affordability reduced by about 5%. If the income of these buyers, which I meant about 50,000 per month, this will also reduce by 5% and so on, all right? Of course, the quantum, the absolute value increases. So if it's 30,000, this will reduce the maximum property price by 200 over 1,000. So if just now you have seen, like for example, District 15, average price of a terrace is 4.2 million. So what use if this buyer, this couple, 40 years old, earning 30,000, used to be able to offer 4.2, but with this new measure, you can only now afford a $4 million property, which means this person or this buyer is priced out of District 15 terrace, for instance. All right, I'm going to go through the details. So we've done simulations like this, 40 years old, 50 years old. You realize the percentage has dropped, even though the value has increased. This is now 3%. Why? Is because the loan tenure has decreased. All right, 15 is now 15. And then if you're 60 years old, a lot of buyers at this age, frankly, they don't take out a loan. If they do, it's 5 years, the decline is much less. All right. So the summary to this, again, is that the higher the reliance on loan, the larger is the reduction. Okay, so if you're going to borrow more, the bigger will be the impact. And the longer the tenure, the larger will be the reduction, which means the larger will be the impact. All right, the older the borrower, the less the impact. So this is all related. Understanding this and also understanding how basically the typical profile of across the different landed property types from terrace to GCBs, which one do you think will be affected the most? Right, among these four? Right, quite clear. You will understand the biggest, the segment that will be impacted the most will be the terrace buyers. First, they are younger, they have longer loan tenure. Very often, we've seen a lot of them also require loan as well, as compared to, let's say, a GCB or a detached. Right. So with this again, can we therefore say landed market is not affected? No, because the effect of terrace, you see the two arrows here, will ultimately affect semi-detached and then slowly detached and GCBs. Okay. Now, next will be the reduced LTV. I won't talk too much about this because it's more about affordability for HDB loans. All right. Now, the third one is interesting. Now, this is where it gets a lot more debatable about this 15 months waiting period, right? Reduce the demand. Of course, that's the objective for the government, and I'm sure they have done their sums. But what is interesting is that the actual effect or the feedback from the grounds may be a lot more varied, to the extent you have seen in less than 2 weeks, there is almost a reversal in this because there's a lot of impact. All right, so let's take a look at this. So MSR, just one we have seen, TDSR, the first one, this will cause a reduction in affordability, reduce the demand, and reduce the price, okay, especially for terrace first-time upgraders, right? This will also mean that more buyers will take a longer time now, okay, because of this reduction, they have to do their sums again, all right? Just now give an example of the terrace buyers, they may need to shift the street, etc. This will reduce the demand, reduce the price, okay, eventually. More sellers, however, who may think that the market will soften sooner, will therefore be more motivated. We are experiencing this now in the market. So they think that, okay, after so many quarters of increase and with this measure, it's probably, okay, maybe this is time. Enough is enough in terms of waiting for the market to rise further. They better start selling now. This will increase the supply and will start to cool down the price. Okay. Now, HDB, this one has limited effect, so we put it as NA. The third one is where it gets debatable, like we mentioned. So for PPOs, private property owners, to buy HDB flats, what are some of the impact? Okay, first, some will say that some landed downsizers may not want to sell now. Okay, because if they sell, they cannot buy HDB. Although owners above 55 years old are not affected, and we still feel this is still a minority because majority of them they are above 55 years old and therefore can still buy HDB, therefore are not affected. But ultimately, this will reduce, basically, some will still be affected. They will reduce the supply, will cause increase in price. And if they do, then what they do, that means if they do decide to sell, okay, and then proceed to HDB, ultimately, because, well, whether it's 15 months or 30 months, they have to downsize because they want to retire. Their health conditions may not allow them to stay in a double-story house, etc., which means in the 15 months, a so-called waiting period, they have to rent first. This coping period, right, will increase the landed demand, therefore reduce the motivation. Just now give an example of some of these GCBs. This may also happen to some landed owners like a terrace and semi-detached as well. All right, so this will mean supply will reduce further and price will actually go up. And next, now landed downsizes because now they cannot buy. We are already experiencing it. Some of my sellers, they say, okay, I cannot buy HDB, I'll buy a condo instead. All right, I'll buy a condo instead. So this will increase the demand for condo. And we saw just now the chart earlier. Will the increase in demand for condo not be related to the demand for terrace? Fortunately, unfortunately, they are related. When more and more condo prices starts to go up, this will give the condo owners more muscle, more financial means to then upgrade to their first landed property. All right, so supply will reduce, and then what happens is that this will actually increase the price in the long run. Now, correction of HDB prices will lead to similar correction in condo and terrace prices. If I were to show you a chart, which we don't have time today, of the many years, you realize once HDB, yes, we'll be talking about the $1 million properties, but once it starts to go down, because then the ability of these HDB sellers to upgrade to their condos at a higher price will reduce. Therefore, then this will also then lead to a similar correction in also the entry level landed property price. Okay, so this will reduce the demand, all right, not reduce the price directly. Okay, so if you were to combine this together, so this is what I meant, all right, so they may buy condos instead, which will increase the demand. And what happens is you realize this flow between the three segments is not something that we can deny. Maybe not in immediate short-term effect, but in the long run, this is what we will see. If we were to combine these three effects now, okay, we still have a bit of an overflow of, on this effect, on this cooling measures, you realize it is not so clear. All right, it is not so clear. We have enough factors to suggest that prices will go down. There are also some that will actually help to push up the price. The answer, of course, resulting net effect, only time will tell. And now it's just 2 weeks into the market, it's too early. Okay, so if we were to put in this now, you can see that we have the COVID effect still overflowing. There's still some, although this overall part, I think, is generally reducing. Okay, it's now basically normalizing. With the cooling measures, we don't know. Let's assume in the short term, we wouldn't know yet. It's a mixed, it's indirect, and it's potentially very limited for the time being, especially for the next 3 months. Okay. And the negative effects, however, will show in the mid to long term. You give it another 3 months. I think 3 months later, when we do the fourth quarter, you'll be a lot more, perhaps you'll be more so-called transparent to us. Okay. So what does this mean? We have a question mark and the cooling measures and stuff. Does this definitely mean we are reaching the tipping point, or do you think there's a correction in the market? The next part of this will be a lot more evident, and things that we cannot type. It has been so evident that I don't even need to elaborate further, all right, which is the real dark clouds. This is the macro environment, basically the black part. Within the segments in the residential market, let's not forget that we are affected majorly by the macro the environment, all right? And basically is every day, we just flip open the papers, is bad news after bad news. Okay, so these are the most recent ones. We have, of course, home loans hitting a record high. Some are saying that 4%. And last year we're just about one low one, right? 1.2, 1.3%. And now it's almost tripled. It's almost tripled in a span of 1 year. This will hit not just, if you look at this again, not just landed, all right, not just condo, not just HDB. It will affect every segment. So this is a downward pressure across our property segment. We're also talking about global trade forecast, basically the economic recession risk, and talks of it is very, very apparent. Okay, So with this coming, all right, there's a rising interest rate, recession woes, etc., etc. This is the biggest risk that's going to happen, and this will definitely, we are already seeing it. You have seen the transaction volume going down for the last few quarters, okay? And if this persists, and if this comes really on a full-fledged, full-blown impact, nobody, no owner, no buyer, or in this case owner, will escape so-called unscathed, all right, by the impacts of this. Okay, so there are, however, certain bright spots. Okay, there are certain bright spots in this, and how this analogy of us, or this prediction of us, however, is still at a very early stage, and we will share more with you 3 months down the road. So I hope you can stay tuned and register for the next one, and we can share whether our hypothesis for this bright spots is correct, because we just thought about this, we observed this, but we want to wait for 3 more months of data for us to conclude whether there is potentially a basically a saver, or your life jacket, for example, for, I think, what is meant to come. Okay. Now, to summarize, what have we covered today? So we've gone through a lot more. Now, firstly was on the transaction volume. You can see that the value has gone up by 3.9% and volume declined by 16%, with detached leading the growth and terrace performing the best in terms of volume. All right. So if you compare across the district, transaction volume-wise, District 13 grew the most, almost half, and District 21 declined the most. Okay, so you have the best and worst in terms of spectrum. In terms of value, District 19 outperformed. Besides being the top transactor, it also outperformed in terms of value as well, while District 11 declined the most by 6%. Okay, now with the latest cooling measures, I think while it's likely to have muted, okay, very muted direct impact, that might be in the short term, okay, there might be mid to long term indirect impact due to the second principle that we mentioned just now, due to the inter-segment influence, okay? And the macroeconomic factors, especially recession, etc., is likely to soften the entire market, okay? Landed is definitely included. I don't think with our limited supply and all this may not be sufficient to withstand basically the softening. By the way, the word I want to emphasize is softening. We don't believe there will be a crash. I don't even think a double-digit reduction is possible before the government steps in. All right, anyway, the fundamentals are quite strong. We're just talking about correction, right? Correction, maybe a single digit. We will share more with this, more with you, I think, in the final year analysis 3 months later. Now, so next 2 points are for, of course, we have buyers, we have sellers here. Let's take a look at some of the advice that we would like to share with you. Again, these are based on our understanding of the market and what we are seeing and attempt to predict. All right, as I said, we don't have a crystal ball. Owners who are now trying to exit the market at a high, okay, dear sellers out there, you now can still do so, but you have a shorter window period to do so. Okay, gone are the days where 6 months ago it's like, okay, let us just wait. 3 months later will be higher, and 6 months will be higher. Now, this is at all-time high. We've seen all indicators. The next quarter may not show the same amount of growth or consistent growth across the whole market, across the different segments. So if you want to still exit and maximize the profit out there, this is you have a shorter time period now. Now, if you are new buyers, so you are staying in a condo now, HDB, you are thinking of entering the market, entering the landed market, you may want to adopt a wait and see first in the next 3 months to see how these latest cooling measures, how the macroeconomic factors play out before you decide and make this biggest financial decision of your life. Okay, and there are, of course, people who are, I call this in transition stakeholders. You are now stuck because you have already taken on the first step. You have either started selling, you might have started buying, or you have already sold. They are now thinking of buying, etc. Or you have made decisions, renting now and thinking of buying, for example. You are unfortunately caught. Okay, so my suggestion, or our suggestion to you, is if your sell and buy decisions are close to each other, you will minimize the impact that all these changes in the market will have, because the longer you wait, the bigger might be the delta or the change in the direction. So if you are selling, buying about the same time, within 3 months, you will not see very drastic change, right? Within drastic change. So you're selling a terrace to upgrade to a semi-D, vice versa. Do not be worried. Focus then on the non-financial factors, because the ideal landed home is not just a financial decision, right? Focus on the family needs, and of course, you're on the affordability, right? Especially the increase in 0.5% now changes in terms of what you can, you should or can outpay per month. Then you may want to then take this opportunity to then understand the market in greater detail. Don't just look at the overall market. Understand the different regions, different districts. Can you do a inter or intra region transition, and consider other parts, other factors which they will fulfill your family's needs. All right. With this, I come to the end. Unfortunately, we have no time for Q&A, and there's been some questions and answers that's been answered already. So if you have any burning questions, feel free to type in now. If not, I don't see any. All right. If not, we just want to see whether you find this let me see. Pardon me. Oh, sorry. Okay, if you can share with us whether you find this landed webinar useful. Pardon us for extending again. I hope that enough content for us to justify the increase or the delay. All right, please share with us. I think this will be encouragement, I think, to not just me, I think my teammates as well, put in a lot of effort to dive into this. Again, this is just the snapshot. We have a lot more information to share with you. We dissect, I think every district there's about like 20 slides or so, and we can go in and try to understand, especially with Huttons Landed Division's database of not just the past and also the present listings so-called available. All right, thank you so much. Wow, we are very heartened. Can I just share this? Although there's some 26 of you, but 100% actually find this very useful. Thank you very much. We appreciate this, and this will probably give us enough boost to prepare for the next webinar. All right, so with this, I want to end with this slide. Again, you have not taken a snapshot of this, please do so. These are the 4 QR codes that you can find out more about us. And if you have any questions, please go to your Huttons consultant, any Huttons agent who have invited you, or any of my colleagues here at Huttons Landed Division. All right. Finally, my name is Willie once again, and together with my team from Huttons Landed Division management team, thank you very much for your attention, and we wish you a wonderful weekend ahead, and hope to see you in the market soon. Thank you so much. Just